Hi everyone, welcome to our new lecture. Today we are not taking any lecture, we are discussing about the trade breakdown of last video I posted on trades, which is based on the quarterly theory and power of 3, opening, high low close. That was the base. And in this trade breakdown, I will discuss about the top down analysis from the daily to 1 minute, which are the PDRs I used and what are the conditions I used for the trading, and when it's coming to the trading, what are the higher time frame analysis and what are the lower time frame analysis. The higher time frame analysis was what are the price was doing in the higher time frame is determined by the lower time frame. Mainly simple, if higher time frame is bullish, the market is also going to be bullish in lower time frame. That's the simplest way. Okay okay when it's coming to the 1 hour, we know we can do from one daily time frame. In the daily, we can see this is the Monday's candle and this is the Friday's candle. You can see the Friday's candle and Thursday candle. This Friday candle is not Q1 or Q2 or Q3 or Q4, nothing. This is called as TGIF. Thank God it's Friday. When it's go to reversing or continuing the trade or opposing the direction of the week, that's the candle. We are not included, that was in quarterly theory. So what are the Thursdays which done by the market regarding to the Friday, we have traded this based on this logic. Okay, in Thursday you can see this high. This high has been closed outside the range of the Friday, and when it's come to the Friday, the Thursday's high, the Friday's high, and the Friday's closing was above the Thursday's high. It is mainly based on candle range theory, CRT. Okay, when it's closed outside the range, the another day was a bullish. Okay, here it's closed inside the range, and this Friday will be a bullish, and it closed inside the range, but we have an FVG strong buying opportunity right over here in the FVG, so market has been pushed higher. That was the daily time frame I analyzed when coming to the CRT. I was a CRT trader and I used the CRT and blend with the time to trade the CRT. So when it's coming to the CRT with its simple logic, it was a bullish day for the Monday. Okay, when it's come to the 1 hour, what I was looking for 1 hour. Okay, in 1 hour we can see this is the daily smart money reversing SMT. When it's come to the Q1 and Q2 makes SMT, so the entire week will be a bullish day. When it's come to the new week, the Monday will be a accumulation or be manipulation or distribution, anything, no matter what was you seeing in this AM session. This cycles AM session was didn't taken by the PM, so it was held in the Friday. So this shows the smart money has been pushing higher. The price has been pushing higher and came down. Now there is no SMD right over here, right over anything. So I am expecting this day will be a bullish day. When it's come to the Monday's opening, this will be a bullish day. I'm waited for the price to push higher. Okay, that was the daily analysis for the daily and 1 hour. I need a PDRA or any key levels. Here in the sell side, I didn't get any key levels. This is the market opening. I think this was the opening price of the range. It was 930 is our opening price, and I didn't see anything. Nothing I seen here, and this is the low which made. This is the bulling bull. This is the upside. The market who is making money, the buyers. So market has been going to sell, and before the 930 opening, who is making money? The sellers. You will be clarity on the 15 minute. Who is making money? The sellers was making the money. So I was expecting that day every little traders will be trade to the lower sides. So nothing is worry about. This will be a bullish day. I'm expecting now at a specific time or specific time of the day the market will be a reverse. That was my major point to pushing to trade the higher. And before entering, we want to look about the Forex factory. Many of the traders will not look the Forex factory. When it's come to the Monday, we have a 10 a.m. news of the red folder. So I waited for the 10 a.m. to show the news. Okay, that was my first concept. Sorry, first mechanism I used. And here, this is the 9:30 opening. Here, this is the opening. Yeah, here is the 9:30 opening. Market has been open right over here, and we know this this is my point of interest. Now after 9:30, I want to see edge swings. I want to see the price was trading lower, but here I have an entry right over here to here. I have a buying opportunity from here to here, but the time is correct, but I'm following different times, so this time I'm not trading. So many of them have been traded. I didn't trade right over here. After that, we have a sell opportunity right over here. This was changing state of delivery, and we got SL. First trade we got SL. This is my change in direction. Okay, first I got XL. I didn't trade this one. I waited for the bullish market. So after taking this liquidity and here 947, 947. This is an IFEG. Have you seen that IFEG have been here? So this was my sell opportunity. I didn't trade it. I know this market is going to be sell. If I got an sell right over here, no problem. I have another entry. This is time based entry. This is also time based entry. This is also time based entry. When it's going to the bullish, I didn't catch it. I didn't miss it. I don't need that one, and I have been sold. I have the view of the selling, but I didn't sell. I want to market to push higher. That was my main look of and look back. When it's coming to this, we have an opportunity to sell. I didn't sell anything. I just waited, and this is my time cycles. Everyone use. I use the time cycles. I use most of the times. I use some time cycles. Time cycles is my point of interest. I use the 30 minutes time cycles and 90-minute time cycles for the trade opportunity or taking the point of interest. If I didn't see anything in 1 hour, I switch to 50 minutes. If I didn't see anything in the 50 minute, I switch back into the 1 minute, the time cycles. I get the look here. We can see the 30 minutes. This is 30-minute range, and we can see this is the high which broken, and we have a change in state of delivery. We got end right away. We got stop out. When it's come to the ES, there is nothing in that time. Price didn't take this high. When it's coming to this high, the price didn't take this NQ make the high, and we have an SMT and point of interest. So the seller opportunity of the why I choose this opportunity for buying. Here you can see this law has been taken. This is a point of interest. This is the time cycles I mostly love. I love this time cycles. Thank to my Frank, which providing me this form with a good knowledge. Okay. Okay, after taking this, if I fail as taking this loss, I'm not chasing my time price. Okay, 43 points I lost. So I lost. Accept the loss, and we have a good entry right over here. 143 points. So losses are it's a part of the game. We cannot trade a very single trade will be a winning trade. No, it's not happen like that. So I explained the buying opportunity and explained the selling opportunity. But when coming to the higher time frame narrative, my point is bullish, and I waited the price to be lower, and I want to take this low. When it's just taking this low, it will be a 90-minute cycle. So yes, failed to take this low. You see that one? So 90-minute SMT was existing on here. Here 90-minute XFT was existing right over here. So market is pushing higher, and the point of interest was 30 minute point of interest. Every 30-minute cycle is not our point of interest. this cycle, this cycle, this cycle, this cycle, this cycle, this cycle. There is three cycles in 90 minutes. We will not take that every 30 minutes as a point of interest. There is some rules behind them. I just utilize how I know how to be take that 30-minute cycle as a point of interest. So there's some main rules for them. You see my execution video last day. I will show my execution video. Okay. Okay. When it's come to the my execution video, I was ended right over here. It was the busy, the buy side efficiency and sell side inefficiency. That's my entry. This is called as institution order flow entry. Look at the time 10:03. This is the 10 a.m. opening. Open makes the low and smart money accumulates the price. The price was the smart money is accumulating the buy orders. So smart money is going to buy. And when we looking on the this time, who is making money? The buyers. The buyers is making sorry, the sellers is making money. So our expectation was buying opportunity. So I waited for the time to correct entry. Look on the time 10:03. I use different times for trading, and it was in the macro window 9:50 to 10:10. That was the macro window. The market has been changing the position from selling to buying. This is the sell side curve to the buy side curve. And here is my entry. I entered and I got stopped out from this candle. After this, I re-enter again. I didn't look. The market has been gone after. I want to see the market. If the market has been traded right over here, I will change my break even to trail my SL. So the market didn't done that. Here we can see and BC right over here. This BC acts as a support to push the price or right over here from here. Why? Because of many times the wicks is making a damage inside the fair value gap. It's BC, but the body is not closing inside the range or inside the BC, so market was pushing higher. This candle makes the high, so I can trail my SL. That was my view, but I didn't remember the price has been taken this didn't taken this high. So I got stopped out from this candle. I waited for this candle to form a time, and look on the time 10:12. So I got an entry right over here, and after 4 minutes the price has been pushed higher. Then I trail my SL right over here. After taking this, then trail my SL. I got stop closed every trades from here. I know market has been closing reversing. I know because my exit was 10:24. That was a time based exit, and price has been reversing. This is my break even point. The market has been taken. If I didn't close, I will stop out the break even. It moves higher, 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 higher. That's a simple logic of the trade. And here we can trade opportunity for selling the price. It's on the time and price based on the first lunch macro, first PM macro, 12:50 to 1:50 to 2:10. That's the first macro. That's our opportunity. We have a buying opportunity and we have a selling opportunity and we have a buying opportunity. We have three opportunities right over here. So that was our main look of the trade, how I choose in based on quarterly and power of the opening high, opening low, high, close. In the low we have an SMT and smart money and time. I teach the time basics from advancing my private students. They will understand what was happened right over here, which time is I ended. Why? Because what was the reason I want to enter right over here, and what was the reason I want to enter exit right over here. It's not 369, it's not nothing, it's a time I use for that. I teaching that my students. Here we have a sell opportunity and we have a buy opportunity. This is 1 hour inversion fair value gap. I just backtest this one, but I didn't trade it. Already in a good trade. Thus the done for the day. Hope everyone is enjoyed. Trade breakdown is total trade breakdown I used and based on quarterly theory. Both time quarterly theory talks about the time and the prices like this, the pattern, the fair value gap, the smart money 30 minutes cycles. If you're trading, use time cycles. Time cycles gives you most of the entry. Right over here, this high is taken and rallied down. After making SMT right over here, is pushing higher. Time cycles plays a important role in trading. This time cycle is given by ICT. So every time cycles have a story and every time cycle cannot be a point of interest. There's a specific time and there's a specific time of time cycles can be a point of interest. Okay, hope everyone enjoy your lecture. If you give a good feedback, I will do another lecture video about trade breakdown and I will continue my 369 CRT trading. So no worry about that. So people don't worry about that. I will continue my teaching the 369. I was in some break. I was trading but I cannot have no mental problem of making some videos. So I didn't edit anything. I didn't nothing. I didn't cut anything. I just showed you how the time and how the price is pushing higher. I predict the pushing higher. I have an opportunity of the selling and buying and then selling. But I didn't trade that one. I only pick one trade for one day. It's almost here is my entry. It's almost 100 points. It's enough. If you are using one mini or one micro contract, it's enough to pass your funded account. Okay, everyone enjoy, stay safe, and good luck, good trading.